Hello and welcome back to the For the Property Investor podcast. And we're here with the weekly news again with, of course, Nick Bendel.
Thank you for having me, Owen. It is a public holiday today in New South Wales where we're recording this, but we love recording the podcast so much that public holidays will never stop us.
Oh, of course not. Of course not. Yes, and happy King's birthday.
Happy King's birthday to you, and you are
If that's
royalty
a
in
thing.
my eyes.
Oh, geez. Thank you, Nick. And I was just about to say, it still feels a little funny saying King's birthday after my whole life saying the Queen's birthday. But I'm sure in a few years' time it'll just be normal. And of course, other states have celebrated the King's birthday on other Mondays. So one day we'll understand why we do this.
We're not there yet, but one day we will get there.
All right, cool. And what's been happening in your week, Nick?
Well, a busy week for Hunter and Scribe. Hunter and Scribe, for those who don't know, is a copywriting agency that writes content for finance and property professionals. And over the past week, and this is quite standard for us, we wrote blogs for an accountant, media releases for a buyer's agent, social media posts for a mortgage broker. Those are just some of the typical jobs and typical clients we work with.
Great. Okay. Well, it's been a busy week for us as well. We have spoken in the past about opening up Adelaide, but I can now announce this week, after this past week, that two more little regional areas that we've opened up is the Mornington Peninsula in Melbourne and Hervey Bay in Queensland.
I love both areas. Both places are really nice.
Yes, they are, and I know quite popular with some investors in those areas. So if anyone has property management or properties under management in those areas and they're not happy with their property manager, yeah, please reach out.
So if we record a podcast maybe on Fraser Island, can we get some sort of tax deduction for that? Are you licensed to give tax advice?
I'm not licensed to give tax advice, but just from experience, there might be a way of making it a tax deduction if you need to visit people who are work related. I'm sure you could get that through. So, but check with your accountant. There's the disclaimer.
Okay, I'm going to very quickly try to get some clients on Fraser Island, and then let's make this happen.
Okay, I'm not sure whether I can do any property management on Fraser Island, but yeah, you have to go through Hervey Bay to get there, don't you?
You do, I believe. There are, well, last time I was on Fraser Island, quite a few dingoes there. I don't know if they would make good clients or good landlords, but certainly something worth investigating.
Yes, but maybe a partial claim because you need to go to Hervey Bay and then a day or two of holiday on Fraser Island. Yeah, you could do that.
Okay, well, if the ATO audits me, I'll just send them in your direction. I'll explain
No,
that you authorized
I
it.
did put the disclaimer in there. Check with your accountant first. Yeah.
Oh, I didn't hear that bit.
Oh, selective hearing. Yes, we are on a podcast, Nick. Yeah.
Oh, so it's all being recorded.
Yes, it's hang on, yes, the red light is on. It's we are being recorded right now.
Okay, well, if the ATO is listening to this, I have no intention of doing
it. Well, it'll all come down to your accountant. So even though he probably gets you to sign a disclaimer saying that any advice he's given, you're taking responsibility for.
Yes, I do recall signing something along those lines.
Yes. Never mind. Well, Nick, what's in the news this week?
Well, I've got 3 news stories for you, Owen, and I take personal responsibility for all these news stories. The first one is national property prices rise for 16th consecutive month. Australia's
Wow.
median price rose another 0.8% in May. That was the 16th consecutive month of growth and took the nation's median property price to a record $786,000. The capital city property markets are performing very differently. Here are the annual price growth stats for each city. Perth, 22%, Brisbane, 16.3%, Adelaide, 14.4%, Sydney, 7.4%, Darwin, 3.5%, Canberra, 2%, Melbourne, 1.8%, and Hobart, minus 0.1%. Owen, it does not seem possible, but Perth's price growth has actually been increasing rather than decreasing. What on earth is happening in Perth?
Yes, from all accounts of the people we have on the ground there, it's still going hard, and has probably got a little while to go still. It's I was talking to one of the sales agents we work with during the week, and he's got a property on the market off. Well, it's an off-market offering, and so he's talking to a few buyers agents already. He's looking to achieve a sale price of 570, and it's currently getting 650 a week in rent.
Mm.
So, from an investor's point of view, that's a pretty good return. And when you're in and at that price point, being under 600,000, that's a fairly attractive price point when you compare it to um, Sydney prices, especially. But then looking at even Melbourne and Brisbane prices, it's fairly attractive. And then you add in that yield, which would be a good 6% yield. It's yeah, very attractive to investors.
It's interesting because we've spoken about Perth a few times in the past few months, and the view has been that Perth was still going to grow strongly for the foreseeable future. We seem to agree on that, but I don't think either of us expected that the growth would actually increase.
Yes, well, with this market and this economy at the moment, things we expect not actually coming through. So it's expect the unexpected, I guess, would be the answer.
Now, moving on to some other cities, Brisbane has overtaken Canberra to have the second highest median price in the country. Melbourne
Hmm.
is ranked only fourth. Why has the property market been booming in Brisbane but been sluggish in Melbourne?
Well, if you choose Brisbane, Melbourne, where would you rather live? And I guess that's where a lot of people are making that decision. Now, there's a lot of positives about Melbourne. A lot of people would choose Melbourne, but I guess there's a lot more people choosing Brisbane. From a point of view, a lot of people prefer warmer weather. It's I like being in the middle somewhere between the two. And it's so there's that aspect, but yes, there's the price point. It's a generally you can get more bang for your buck in Brisbane versus Melbourne, even though the price has overtaken Melbourne. Median house price has taken over, so it's uh, interesting. And then there's some tax laws in Melbourne that are putting a dampener on the investment market. So yes, there's a lot more activity in Brisbane.
As a Sydney sider, I have almost a legal obligation to say bad things about Melbourne, but it does strike me that Melbourne is our second largest city, and at some point in the near future, it's going to overtake Sydney in terms of population. So it does seem strange that a city of that significance would be ranked only fourth in terms of median price.
Yes, well, there's a lot of things happening in Victoria. From a tax point of view, that is making it very unattractive for especially investors to go there. Now, a lot of people would say that could be a good thing for first home buyers to be able to get into the market. It's helping keeping a lid on property prices. But there's probably a bit more to it than that. Yeah, there's a lot of yes, it's supposed to be a very fast-growing city, and it's going to be overtaking Sydney at some stage, apparently. But we'll wait and see. There's still issues of a shortage of housing supply in Melbourne, just like everywhere else, and it's going to be a wait and see to see what happens. There's a large population there, and they still need somewhere to live. So we don't mind. As long as people need somewhere to live, we're there to try and help them.
And speaking of Sydney, which of course is a much nicer city than Melbourne, Sydney's median property price is now at a record high, $1.156 million. The previous record was set in January 2022. From that point, Sydney prices fell 12.4%, but have now regained all that lost ground. Owen, was it only a matter of time before Sydney returned to record territory?
Yes, it was, and I'll just make the distinction there. That's the median property price, so that's including units. I think if you looked at houses, that'd be over the 1.5 mark or even 1.6 now. So it's really up there. It's and property prices, yes, even though we had that fall when rates started rising, because we'll still had that shortage of supply of properties, it's kept the pressure on pricing and kept the pressure on pricing going up, more specifically.
Well, let's move on to our next story. And I promise not to say anything bad about Melbourne in this next story.
Okay, all right.
Economy grows just 0.1% in March quarter. The latest data from the Australian Bureau of Statistics shows that economic growth has now trended down for 6 quarters. In the December 2022 quarter, growth was 0.8%, then it was 0.6 in March 2023, 0.4 in June 2023, 0.2 in September 2023, 0.3 in December 2023, but now 0.1 in March 2024. The RBA increased interest rates over the past couple of years to slow the economy and thereby crush inflation. As the data shows, the RBA has succeeded in putting the handbrake on the economy. However, crushing inflation is proving harder to achieve. Inflation has slowed from an annualized rate of 7.8% in December 2022 to 3.6% in March 2024, but the RBA is struggling to reduce inflation to its target rate of 2 to 3%. Until that happens, the RBA is likely to keep interest rates high, which will continue to have a negative impact on economic growth. Owen, given that the economy has slowed so much and that we're actually in a per capita recession, shouldn't inflation have disappeared by now?
You'd think so, but there are a number of factors that are holding inflation up high that aren't necessarily related to where the supply factor, like housing, is what is the major cause of those prices still increasing. So that's a long-term issue though, and which isn't going to get solved by just putting uh, money into people's electricity accounts. And it's, even though that's one issue that's causing inflation to stay high, but it's not going to necessarily make a huge impact. Even the RBA governor agreed with that. That putting $300 into everyone's bank, into effectively everyone's electricity account, people won't see it. They won't really feel it. It'll be absorbed, and yes, it'll be. So it's really just a waste of money, especially for everyone. If it was able to be given to a few people who really needed it, then that would be great. But yes, we would have liked inflation to have come down further below the 3%, but it hasn't, and we're not sure when it's going to.
Well, you get paid to answer the tough questions. Do we need another rate rise to bring inflation back to that 2 to 3% target?
Oh, good question, Nick. And if we were to ask the question, if of that right now, like, would we need to do it right now? I'd say no, because there are other signs in the economy that um, indicate that the the economy is going to slow even further, and which might then push inflation down further. But with the stage 3 tax cuts for every Australian kicking in on the 1st of July, um, we don't know what the impact of that's going to be. That could actually push inflation even further up because it'll give people more spending power. So, and that's where I think everyone is waiting for the end of the year of maybe a earliest September, but more likely October or a November rate rise. And because we need to see what the impact of the stage 3 tax cuts are going to have.
It's going to be really interesting to see how this plays out. It's notable that a few months ago, we were all talking about the next movement in rates almost certainly being down. Now, a lot of
Mm,
people are talking about the next movement being up. So sentiment has definitely changed.
yes. Hopefully they don't have to go up, and we can have a leveling off, but of price increases in a number of factors, um, and one being property prices and renting, and especially on the rental side. But to be able to do that effectively, we need to have more supply in the market.
Well, our final story today, Owen, is investor borrowing nearing record levels. Property investors signed up for $10.86 billion of home loans in April, according to the Australian Bureau of Statistics. That represents a 39.1% increase since March 2023. So 39.1% increase since March 2023, when investor borrowing bottomed out at 7.81 billion. By way of comparison, the record month for investor borrowing was January 2022, when investors committed to $11.59 billion of loans. Owen, you're someone who's got property management business in multiple states, so you're really seeing this firsthand. Why are so many investors entering the market right now?
The main reason is there is a slowing of the property market. We've noticed across many across many markets where there isn't as much activity from owner occupiers. A lot of people are hesitant to make a decision about buying because of interest rates and where it could and where their next move could be. And so people are starting to sit tight, which leaves it open for investors who are in a position to be able to buy. Um, they will look at being able to buy well. So they're still focusing on good properties with decent returns in good areas, and that's what they're focusing on. So and they're looking at markets where there's still good rental returns. There's a lot more. The biggest difference with investors in the last few years compared to maybe even 5 years ago or 10 years ago, where there's a much more focus on a higher rental return and getting that yield, where everyone was just wanting to buy in their local area or looking to buy in their capital city where they lived, and regardless of what the rental return was. It's now there's much more focus on rental returns so that they can buy a property and keep it for longer.
Hmm, with More investors entering the market, that means we should have more rental properties. From what you're
Mm.
seeing on the ground, has all this investor activity filtered through yet to vacancy rates and rental rates?
In some areas, it is. Um, we at times will put a property on the market and find that there's quite a few properties on the market. We've had that happen this week, in fact, where and it was in Perth, and there were quite a few properties on the market at that time, around about the $700 a week mark, in this particular area, and some of them had been on the market for a number of weeks, which is unusual. So we talked to our client and suggested that it's better to get the property um, tenanted as soon as possible, because the biggest cost to an investor is vacancy.
Mm,
So the best thing to do is to be able to meet the market where it is, and this is how markets work. I've had some comments on some of our social platforms, or one in particular, where their their thinking is that markets are made, especially rental markets, are made by the landlord. And this is a perfect example of where it's not, because uh, the every one of these properties in this particular suburb is trying to achieve around about the $700 a week mark for this typical type of house. But the market is obviously a lot lower than that. So we're moving the price to a 650 mark,
mm,
and hoping to get at least within the next week. So this is how markets do fluctuate. Now, this might be only a short-term issue in that particular suburb, because markets can fluctuate from week to week, even as more supply comes onto the market, and it has to meet the demands that's currently there. So it's interesting, and seeing these little pockets that come up, and then in other areas, prices are still moving up. So my piece of advice to renters out there looking for a rental property, uh, it would be well worthwhile to look around in neighbouring suburbs, or even a little further afield, rather than just sticking to the area that you know and thinking that you have to pay the price that is being asked. You can look elsewhere, look at different markets, if you want to save money.
And I'm wondering, should we have a view on all these investors entering the market? Is that a good thing? Is it a bad thing? Is it neutral? What should we think of it?
Well, from the renter's point of view, it's actually a good thing,
Mm,
because it's putting more supply into the marketplace. And the more supply that's out there, then that'll bring rents down, and it'll at least help to stabilize them and stopping them from going up so much. And that that has to be a good thing for them. So it's definitely not a bad thing, and it ebbs and flows. There will be times where, you were saying in what was it, March 23, when investor borrowing bottomed out, and that was almost a 30% decrease, from 30 or 40% decrease from the peak. So that just shows there's a lot of fluctuation.
yeah, and it's interesting the point you made a few minutes ago, quoting that person on social media. Markets aren't set by landlords or tenants; they're set by everyone. If if markets were set by landlords, every tenant would be paying $1 million a week, and if they were set by tenants, every tenant would be paying $1 a week. But they're not set by either party. It's a complicated interaction between the two, and it depends on supply and demand, and the market finds an equilibrium.
Absolutely. And yeah, I can empathize with tenants as well, because some of them are having to experience not just a $20 or a $50 increase, but in some cases they're going to $100 or $200 increases, and which is tough, difficult. So they need to do what they can control, which is look to other areas where they can move with cheaper rents, and that will change from time to time.
Well, thanks so much, Owen. I always love hearing your insights into the property market and the economy. I learn something every week. Thank you so much.
Thank you, Nick, and thank you for bringing the news to us so that we can talk about these important topics that affect us all.
See you next week.
Thanks, Nick. See you then.